Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the next VRIC, January 21st and 22nd, 2024. Stay tuned for tickets. And today's guest is an energy expert and the founder of Lithium Bank, an exploration and development company focused on direct brine lithium resources in Western Canada. And they just put out a PEA, which we are going to get to. Is Gianni Kovacevic. Welcome to the VRIC channel.
Thank you, Jesse. Many is the number of talks that I gave at the VRIC over the last 20 years. I now live in Croatia. We're working on some hardwood flooring here at the crib in Zagreb, but I'm looking forward to potentially attending in January. I think it's been a few years, COVID, all that stuff, and we're going to talk about some of those themes. And if people have seen some of my talks before, they will count this as a report card. Where are we now in the middle of 2023? Commodities, everyone talks about them, but the prices aren't doing anything. So, you know, what something's got to give here.
Yeah, absolutely. And we definitely want to have you at the VRIC. But to start things off here, I want to hear your views on where the economy is headed more generally and how bad you think things could get in the broader market. Because I've talked to a number of people on this channel and others. I've heard everything from stagflation is coming. It's going to be a deflationary recession. We're going to have hyperinflation and the dollar is going to collapse on the extreme end. So what is your view?
I recall the 1980 movie Being There with Peter Sellers, and he was this imbecile who tripped his way into this tycoon's villa. It was the Biltmore Estate in North Carolina, the grandest house in all of America in the movie. And he ends up meeting the president of the United States, and the president asks him, "Where do you think the economy's going?" And of course, he's an imbecile. He doesn't know what he's talking about. He's a gardener, and he says, "Well, it has seasons, and in winter there will be green shoots, and then will be spring, and then will be winter again." You know, everyone talks about a hard landing or the recession that's so well forecast, but doesn't seem to happen. And I think many people that watch this channel may have seen the Stanley Druckenmiller, and he was sort of analyzing this situation as well, where you ask many opinions, you're going to get many different ideas. I don't have the answer for you, Jesse. I'm being a little bit foolish here. But basically, the economy is nervous. People have went through, for the first time in many people's lives, real inflation. And if you look at the people buying stuff down at the market or buying real goods, things got a lot more expensive after COVID. Well, sure enough, they printed all that money all over the world, and it devalued stuff. And of course, the price of commodities all went up, but they've all collapsed, and they all happened around the same time. So commodities have been cheap, relatively speaking, for quite a while now, for a few quarters. So now the print today was that American inflation was lower than expected. I think it came in around 4% or 5% or something like that. Well, that doesn't surprise me. If all commodities basically from where they were really had a dramatic 30, 40, 50% fall, that would make sense that eventually you would see that. So it's going to keep ticking along. And the themes that this channel follows are still this painful, long process, this pivot towards electrification. And there is going to be a strong CAGR growth rate for those products and the inputs that make them possible. So when you're looking at things like copper and lithium and all those ancillary different elements, I think they're going to be doing very well for the rest of this decade, meaning going from the bottom left to the upper right of your screen. But when it comes to gold, what's happening with gold? Everything that they wanted to happen, the gold bugs, basically happened, and gold went nowhere. And I want to use one word, it's hypothecated. I mean, that's all I can say. The contracts and the promises don't exist for what gold is out there. And I think that game can always be played. And as long as we have an options market or a futures market, and like I said before, we are always going to have a futures market in commodities, you're never going to get true price discovery. Or you have to literally run out of something. And then you get this moment of joy. And then the commodity always rolls over as people climb a wall of worry. This will always repeat itself, even though it's going to be very good times for electrification and these things that make it possible. the really good times, the boom times truly last. You can count them basically in months or maybe a couple quarters. They never last years. So that's what people got to follow when they follow commodities.
Well, I definitely want to get to copper and lithium a little bit later, but I want to draw on your expertise in energy to kind of go through some of the energy producing commodities, starting at the bottom with coal. We've seen a lot more demand for coal than people would have expected, considering this whole shift towards electrification. We saw certain events come to pass that, the rush to accumulate LNG in Europe caused countries like Pakistan to be able to be outbid. So now they're taking a more hard turn towards using coal. Of course, we're seeing Germany burn more lignite coal. Is coal going to be something that's going to be continued to be used for the long term? And how do you see that market playing out?
Well, coal's an important part of the global energy mix, and every country has a different sort of, let's say, attributes, or they have certain natural resources that make energy possible. If you don't, you have to import. Japan is one classic example. So Japan is a country that before Fukushima had this tri-pillar. They had coal, they had nuclear, and then they had LNG and fuels and what have you for their energy sources. They shut the nuclear industry off almost overnight after Fukushima, and Japan's energy sector did work, but they're making a longer term pivot towards LNG natural gas with renewables, and now coming back on, the nuclear is coming on, and I think coal is going to be more of a twilight industry there. When you look at the world's biggest energy market, by far, it's China. Coal has always been the sort of the dominant part of that energy mix, but they invested, I'm talking over the last 20, 25 years, they invested a lot in hydro, they invested a lot in renewables. They're the leader in every category in renewables, and they've also invested in nuclear power, and they've had this sort of kind of like what France or what Russia had. They had an industry that they also want to export to the world. So it's a smaller pillar than most people might think in China. If you look at where the energy mix comes from, and I believe that China too is going to slowly be moving away from coal, more into renewables, and what augments renewables the best? It's natural gas or LNG, and the reason is it's instantaneous. Coal does not turn on and off automatically like that. Natural gas is literally in 5 minutes. You turn it on or you turn it off when you need it, when the sun's not shining or the wind's not blowing. Nuclear is even worse than coal because it takes weeks to really calibrate and fine tune a nuclear power plant. You can't just turn it on or off. This is why Germany, they're turning off their nuclear power plants for reasons that doesn't make sense, but anyways, that's happening. But you never had a power outage. If you lived in Berlin, Germany over the last 40 years, you never had a power outage. They always had too much power, traditionally. And so power always came on a dual radial system. It always came from somewhere, but you never ran out of power. Where if you live in British Columbia, you would understand when the wind blows and you knock the power lines out. Sometimes you went without power for half a day or something like that. That's something you never experienced in Berlin. So to answer your question, the coal is not a growth industry anymore. Not only it's just not the right fuel to augment renewable energy. And if you're the CEO of any power company, you know that. So you want to have a long-term solution, which is going to be LNG if you have to import, or natural gas if you have a pipeline, and that's the way they're going to go forward. And all the other stuff is sort of periphery. And that's something they can celebrate, not just because it's the right thing to do, or it gets them maybe a bit of green tickets for their for this green energy pivot. It makes money. It's the right move. It's technically what you must have. And so I believe coal is, if you're in the coal business, it's going to be a great business. You're going to make a lot of money, but not many people are going to be getting into it. And I remember that Mr. Albanese, the former CEO of Rio Tinto, he said this once at a conference, and I credit him, but I plagiarized it. And he says, it's like the tobacco industry. Since the cancer and many people quitting smoking, and the only growth has really been in the third world, but tobacco has not been a growth industry. It's been a terrible industry if you wanted to get into it. But if you were already in the tobacco industry, it's been a very good business for 20, 30 years. I think coal is going to be something similar. And you're talking thermal coal. We're talking about power. That's a totally separate thing to making iron ore and talking about hard coking coal. They're two totally different things. But we're talking about thermal coal. But still, for those that are in it, And for those that aren't going to get their heads beaten over for their ESG, they're the ones quietly on the side are going to continue to have a coal business. And I think it's going to be, for those guys, a good business. For the rest, I think you want to stay away from it.
Very interesting comparison with the tobacco industry and some great insights there. So you did mention natural gas several times. So I wanted to know where you see that position at the moment. Obviously, calling prices doesn't necessarily make sense, but we have seen prices that they ramped up quite a bit last year, and then they declined greatly, collapsed basically. And a lot of this people are attributing to the warmer than expected winter in Europe, and they had accumulated all this LNG, and now they have reserves, which are fine. Some people are pointing to the fact that this could just be temporary. However, we could see more demand come on in the future, and the prices right now just don't make sense for the long term. So I'm wondering what your thoughts are there.
Well, the natural gas now, with the advent of LNG, liquefied natural gas, and more importantly, the exportation of it and the storage of it, this is a new-ish business. This is something that they found, those vast reservoirs in Qatar. You have them in Australia, and of course, America. America now, just recently, is completing these LNG export terminals. And if you make an agreement with someone, a country, like Japan, for example, this is something that's going to happen for 20 or 30 years. And it's going to be, in my opinion, a very reliable transport mechanism that they can rely on the longer term. But it's going to have, for something that's not consumed, or where can you store it, or how many days or weeks does a country like Japan want to store it for their solutions? And that's where the price is going to fluctuate. Where we remember 70, 80 years ago, oil is like a plumbing system. And if you have too much oil in one place, it spills over. And oil, once upon a time, if you can believe it, Jesse, like in the 30s, went to zero. You would buy a barrel of oil for 5 or 10 cents in some parts of Texas back in those days. And I think that natural gas is something that, are you going to see those really expensive prices? And it was traditionally tied on a 6-to-1 ratio with oil that worked very reliable. If you look at the price of natural gas landed in Japan, it was predominantly a 6-to-1 ratio, which is the energy value of the product compared to oil. I think you're going to find something like that, where depending on how reliable and how strong that network is, and for how many years so that trade happens, you're going to see that kind of price discovery with natural gas. So it's still important. I think natural gas should and needs to be discovered more so in Europe, so they have more of an on continent solution. And the real question is they completed the Power of Siberia from Russia to China, and they had all that trapped gas in places like Uzbekistan and Kazakhstan, and it wasn't able to go west to the Caspian through Azerbaijan. But that's now being reworked through pipelines to China. And once again, this is a reason where it's going to augment the coal industry, and it's very easy to transition a power plant from thermal coal to natural gas. How is this going to take place? And the more they go down that road, where China and Russia make a 40 or 50-year promise with these large caliber, large diameter pipelines, and no longer is that gas going to go to Western Europe. Is this just saber rattling? Are they really making a long-term pivot? Because anyone that knows anything about global energy and knows where renewable energy is going, they know that to augment all these renewable energy schemes, you're going to have to use natural gas or LNG for decades. So it's going to be interesting to see what happens in Ukraine, Russia. And if Russia, not Europe, if Russia is serious and they really can have long-term solutions on transporting that gas to a different direction, expensive, difficult, but once that's been made, that gas is gone. It's not coming back. So it's going to be interesting to see what happens there, and that could create more of a price pressure to the upside. Unfortunately for the speculators watching this program, this is something that you can't really speculate on week by week. This is either a news item, or this is going to happen over the Chinese way, over a long, strategic, thoughtful way, with a long-term solution. That really, it's a 50-year solution. So to be determined. But the price of natural gas is going to continue to be volatile, but I would say under price pressure because of all these reasons we just talked about.
Well, let's shift over to nuclear energy. You mentioned that as well. And last time we spoke, you said that nuclear had several advantages and things going for it. It is incredibly expensive, and so not necessarily a practical solution across the board. So, could you talk to us about that?
Well, nuclear is such a magnificent energy source, but it unfortunately came to society 50 or 60 years too soon. And so you have a little bit of a society phobia, and this is always going to continue to happen. And there's 450 some odd reactors operating in the world today. What number of those reactors are 30 or 40 years old, and how many are or even older, and how many are either going to have to get expensively retooled for the long run, or shut down, because you cannot keep operating a 60 or 70-year-old plant forever. A decision has to be made. And the answer is, it's a ruinously expensive business. But leave that aside, Jesse, and leave the side that it makes sense, and leave aside the fact that it's green, it has no emissions, expensive to build, but once it's operating, it's very economical, and it can work basically anywhere in the world. But you have to have community buy-in. You're going to have a hard time with that, I think, in most Western government neighborhoods. I don't know anywhere in the United States where they're going to be open arms. The greenest of the green are still not going to want to have a nuclear power plant. But leave that aside, Jesse. If you're the CEO of a large power company, you are not, even if you became CEO tomorrow, you are not the CEO that's going to turn that nuclear power plant on, because it won't be built in 10 years. They know that. And it doesn't help today. If you're the prime minister or the president of a country, you know that if you get elected tomorrow, you are not the prime minister or president that's going to be turning on that nuclear power plant. They get no benefit from it down the road. So if you ask 1,000 citizens of any Western country, how many people would like us, even what we know now with energy scarcity and being green, how many of those 1,000 people are going to vote yes to have a nuclear power plant? Well, you might even get 50-50 or more. But then the ones that say yes, but it's going to be in your county. How many of those hands all of a sudden drop? With my heart, you know the answer already, Jesse. There's no buy-in. But more importantly, the CEOs, they don't get any economic benefit out of it. Their fingerprints may be on the construction of it, but they're not the one that are going to be turning it on. And after all that, because the future of energy is going towards renewables, many different forms, offshore wind at the gigawatt scale, and they know as a CEO they need to have automatic augmentation of those renewable schemes when they don't work, and nuclear simply does not fit the bill. Thermal coal simply does not fit the bill. They need natural gas or LNG because it's instantaneous. And they also know how much emissions is that going to, it's not burning 365 days a year, 24 hours a day. That natural gas power plant is on when you need it, Jesse. 3 hours here, 2 days in a row there, a week on, a week off. And that's the solution, and that's where they're going. And I think that's, nothing has changed. So now as a speculator, because your viewers aren't buying shares of energy companies, whether they're building or operating nuclear power plants, they're in that they care about uranium juniors and uranium shares. And there still is a mania in waiting in owning the shares of a uranium junior. But you have to be very acute. You have to follow this very carefully. God forbid there should be an accident at an operation somewhere in the world on a Saturday morning or something like that. You can't sell your shares fast enough on Monday morning. And I think it's a trade. It's a trade to be made. That trade is on. I think, especially with a lot of the shares have now fallen off. The uranium prices have come up, so things are getting a little bit more interesting. But those are all the factors you have to look at. And I think with my head's wired as someone who understands power systems and what's going on with various different countries and with certain companies, and that's a caution. And people, it's not just kittens and cupcakes, because it's not so easy. Where a lot of the pundits you see, it's an automatic, it's waiting, it has to happen. It's not a question of if but when. Yes, with some caveats. And I think for me, it's just easier. Lithium and copper are just, you're going to make just as much money, if not more. And there's nothing that's going to derail that. There's nothing that can happen unless they can learn how to transmit big power wirelessly, which they're not going to do, not for the context of speculating in copper juniors for the next 3-5 years, right? And that's where this money is going to be made in the next mania. And I think that's where, if you have $1,000 invested in juniors, you do not want to have $990 invested in uranium juniors. You want to have at least a balance. And I would say your scale wants to be tipping to those enablers of electrification, clearly led by lithium and copper, as I've already explained many, many times over many, many years.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
With renewable energy, let's kind of shift to there and get some more details, because you've said that that's the way the world is moving, and it definitely does seem that way. So what are the viable ways of providing energy through renewable? You were mentioning wind, solar. Does geothermal come into play? Is hydro renewable energy? Does that come into play? What do you see when you look at the future of renewable energy?
Well, number one, by a power of magnitude, is conservation, Jesse. The average house in America uses way more electricity than the average house in Switzerland. Okay. When electricity is expensive, you conserve electricity. You buy more efficient items, and those things are being mandated. They're being made more efficiently. Now, you can't calculate that in a week, but in the context of 10 years. So for America to simply, all things being equal, to use 20 or 30% less electricity per household 10 years from now, this is a layup. Okay, number one. Number two, every structure is either going to be retooled, or when they're built new, are going to be energy self-sufficient. So once again, when you calculate this over 10 years, for many structures, they're going to be able to have these the ability to, in fact, generate excess energy. And then when you combine that with a battery, and those batteries are going to be built over 10 or 15 years. I'm not saying they're going to be built in one day, but over 10 years, they're going to have excess energy. And that excess energy is going to do one of two things. It's going to be it's going to charge the car, the electric car, at night, not in the day. These morons that say if everyone comes home at 5 o'clock and charges their car would kill the system. Well, of course it would, but no one's going to do that, because at 5 o'clock, electricity is expensive. At 12 o'clock at midnight, it's a giveaway. Or you're going to use the energy you were generated in excess all day when you're not home with your solar panels. Or you're going to go to work where the big building, which is solar panel on the roof at a technical park anywhere in the world, they have too much energy. They're not using air conditioning. They're going to charge cars, and you're going to take that car home, and you're going to get paid. Plug your car in and reverse feed it to the grid. Not because you're a nice guy, Jesse. You get paid to do it. So when you put those two things together, that's how renewables at the micro scale, at the neighborhood scale, at the your house scale. Not that government and big industry takes care of everyone in the whole township of 50,000, but when you put that together, it's a huge line item. So using less energy, which is only possible, once again, Jesse, by having more copper. The more energy efficient a product is, typically, the more copper is in it. It becomes more efficient. And you certainly aren't using aluminum, because aluminum is very efficient, And then the second part of it is, when you look at that, taking care of neighborhoods and taking care of individual houses using renewables. And then we're finding Vestas, the world's largest wind power company, they've installed countless millions of those big wind turbines. I did a talk once with a Vestas executive, and of course he told everyone, I didn't realize this, they all talk to each other. They all collect data. So the wind turbine they installed in Northwest Texas 8 years ago, or in Medicine Hat, Alberta 6 years ago, has been collecting data for 2,000 days. And those turbines, they turn with the wind. The blades pitch. They can be stoked at 6 kilometer an hour winds now. And their efficiency is not 5 or 10 or 15% of the time, because what they're doing is they're saying they're installing more wind turbines where the factors are 30, 40, 50%, 60%, and less turbines where it's 10 or 15%. Makes sense. And so this is what can be done at a larger scale. And as anyone now should know that follows power systems, when you have DC power transmission, you can move power 3,000 kilometers, 2,000 miles very efficiently. So even if the power ends up being more and more generated in places like Oklahoma or Northwest Texas, you can move that power to California. Now, is America doing this? Of course not. We have huge curtailment issues. Germany, curtailment issues. But where's the world's biggest energy market? It's China. Where's the world's biggest generator of energy? China. They're doing it, happening in real time. And almost all these big innovations have happened in China for the Chinese, and now they're exporting that to the world. And that should matter. And for me, why do I care? It consumes copper. Just keep consuming it, because the CAGR growth rate from copper is not going to be 1% or 2%. It's going to be 5 or 6%. And that's why it's something that, running out of a commodity doesn't matter, Jesse, until it matters. And then it matters a lot. So I wait for these mania windows every 4 or 5 years. And I think now it's going to happen there's going to be 2 or 3 mini manias between now and 2030. And when that happens, when the copper price goes higher, ideally you want it to go through a new all-time high. And it's eventually going to go through a new all-time inflation-adjusted high, which tells me you're going to probably see copper around $7 a pound, maybe $8 a pound. It's not that I'm just punting out here. That's also corroborated, or it's compounded by the engineering and the grade of rock. How much copper is in a ton of rock, and that keeps going down. And to make a resource into a proven and probable reserve for a mining engineer, well, I sleep very well at night that copper is not going to be at $3.80 a pound in the distant future, because you cannot turn an uneconomic resource into a proven and probable reserve at this copper price. So truly, not an if, it's a when. When will this happen? And you don't have to wait, I think, 1,000 days. I think in the next 365 days, we're going to start to see some positive action, because when you actually run out of the stuff, that's when people start scrambling. And the speculator is going to drive the price forward for us. And they always do, they always will, and they will this time again, in my opinion.
Right. And as you've mentioned, copper is very much needed for renewable energy as well as traditional energy systems. I believe a lot more of it is used in renewable energy systems. There's issues with where all this supply is going to come from. Last time I spoke with you, you highlighted this, saying there's very few operating copper mines at the moment. It takes a very, very long time to bring them online, especially if we're talking about going from discovery of a deposit all the way to actually producing mine. Incredible expense, incredible amount of time. So the supply demand setup seems very favorable. Maybe you could speak a little bit about that, and also, how your average investor should approach the space in terms of, should most people just buy an ETF? Do you think there's room to speculate on the juniors, on the bigger producers, on projects in development? How do you look at the space in that sense?
Well, I don't give investment advice. This is what I'm doing, and what I think what has worked. I've lost a lot of money in juniors. I followed it for 25 years. So anyone that's been in it, and particularly when I was younger, when the cycle turns, you think you're smart. You're not that smart, because it's like the tide going out. Everything doesn't matter. I don't care how good it is. It just, everything goes down. And the people that are seasoned, that are sophisticated, that have been there, they know these things ebb and flow. So what you want to look at is a project that's real. Now, if you can't determine what a real project is, with real people involved, with real skin in the game, with real investors, with say $100 or $200 million has been spent on the project to de-risk it, because this is a very risky business. It's nice to go wildcat drilling and discover a big high-grade hole in a good location near surface. That's nice, but you can't count on that. So I think when the cycle is very negative, you have this high-quality projects that have had hundreds of millions of dollars spent on them with good quality people involved, and they're trading at a fraction of the money that's already been invested. Then you look at the graph. Let's look at a 5-year chart of this thing. Is it at the highest high or at the lowest low? Well, you don't have to be a genius. If you can follow a stock chart, are you closer to the bottom or closer to the top? it's good timing because the copper price didn't totally collapse. It didn't go to $2 a pound like it did in the last couple bear markets. Yet some of these shares are trading as if copper had went to $2.50 or $2 a pound. So that's good. So I would start there. And then I would look at using some common sense. You want to be in a place where a copper mine could actually be built, because your junior's not going to be building a copper mine. Don't fool yourself. Your executives should have the wherewithal, the motivation, and the ability to attract someone to help them, or ideally sell the project to. And so you want to look at something that's plausible. If you're in Crazyville or in somewhere where it's very environmentally sensitive, you got to really think about this stuff, because then it's just a speculation. You're buying the shares for whatever reason, right? For them to drill a hole, or for just the copper price to go higher. I like to do it a different way. We did Copper Bank. We bought high quality projects in good jurisdictions that had a fortune spent on them, and we held them. And then when the copper price appreciated, our speculation was that high quality people are going to want to move them down the next bit of de-risking. That's exactly what happened with Copper Bank. It was taken over by Paul Harbidge, Russell Ball, Graham Richardson, fantastic team. They've raised now, $80 million on the project. And they're a team that I believe are going to have the ability to do high quality work, to be able to demonstrate to a larger company, someone that can actually build Copper Creek. And they don't exist. How many Copper Creeks are there in the world? In a place with a predominantly private property in the core of the project. It's in a great location in Arizona. It doesn't have a lot of the sticky wicket issues that other projects have. And they're just going to methodically move it forward. And that's a speculation that I think you can look at. And it's a stock that you could look at. Faraday Copper, FDY. Now I still own a lot of that stock, so I'm very selfishly motivated. But I'm not selling all my shares to go buy something else. There's nothing better to buy. If you can nominate something better for me to buy, Jesse, I'll gladly trade some of those shares and buy something else. But I like to sleep well at night. And I think you can look at that and then do a very simple comparison. Look at a project like Copper Creek, which is owned 100% by Faraday Copper, and just compare it to any other junior. Compare their share count, cash on hand, and where that project is going to go. So I think that's where people need to speculate. If you're going to speculate in juniors, either you're doing it with a really high quality team that's got a lot of science that's demonstrating that we need to drill a series of holes to try to find a new discovery in a good location. Because if they do, that share is going to go, it's going to go parabolic. Or look at the DNA of a stock. It's went up and down. It's traded for many years. Something like a Faraday. Is it closer to the top or closer to the bottom? Where do they raise money? How much money do they have? Is this team going to be able to do it? And then you go in with the management team that's highly motivated. They got a lot of skin in the game, and you just ride the wave. And you put a piece of your portfolio in a company like that. I think that's a little bit more of a calculated speculation rather than rank speculation, where you're just throwing darts on some people talking what they're going to do and how they're going to do it without any, without the ability to deliver. So I like the fact that they've got a timeline. They've delivered everything that they've said so far since I became just a shareholder. I stepped away from CEO and stepped away from being a board member there. And I think I like what I see so far, and everything, they've exceeded my highest expectations. So that's something that people can look forward to, can follow, I think.
So let's discuss lithium here to finish things off. You've mentioned that it's another essential mineral to this clean energy, renewable energy transition. Is lithium's use strictly in EV batteries? Is that the case? What are the other uses for lithium as it relates to this renewable energy shift? And maybe you could also talk about Lithium Bank and what you guys are doing as well.
Well, the growth in lithium is EVs, of course, but it's batteries, all batteries. And I've already alluded to the fact that there's going to be tens of millions of batteries installed in homes and business around the world, so they can store excess energy within this long-term energy plan, which is going to be renewables, not one solution, but many solutions in many neighborhoods, depending on your endowment. And they're going to install tens of millions of batteries around the world. And they're going to install hundreds of millions of batteries in electric vehicles. So the CAGR growth rate for lithium is going to be very strong for the next 20 years. we don't have to talk about that. I think people can appreciate this. And all the lithium that can be produced by the various companies is going to be taken up by chemical companies, industrial companies, energy companies, battery companies, and around the world. So as much lithium as can be produced is going to be taken up. The real question is, where is it going to come from? It cannot all come from hard rock mining. It's just not possible. So there's been some discoveries, part of the solution. It cannot all come from the salars of South America. It's impossible. You cannot ramp up the industry that much. And just look at what SQM and some of these other companies, what their prognosis is to invest now, and what will it produce? Well, they're not tripling their production, right? They're growing production a little bit, but it's not going to be able to grow the lithium market by 1,000%, Jesse. So you're going to have new ways to extract lithium, and everyone is talking about direct lithium extraction, which is where you take briny water, you bring it up to surface, goes through a chemical process, and you basically get a lithium product to go into a battery of the future almost instantaneously. Well, I mean, it has so many benefits that where do you begin? I mean, the footprint is smaller. The process, if you are evaporating a salar high in the Atacama, it takes a year to evaporate the water, right? So it takes a long time. So even there, you're going to see advents of DLE where it can be done quicker with a smaller footprint. And the Saudi Arabia of these types of reservoirs only happen in a few places in the world. So it's geologically more scarce than oil, as scarce, or I would say even more scarce than copper. Now, with a caveat, lithium is a very abundant product. It's everywhere. If you talk about lithium, lithium is very abundant, but at a concentration high enough that you can actually do some mathematics around it to have a direct lithium extraction project. And Lithium Bank is a company that we started 4 years ago. It happened with good timing. I had a very eloquent step back from Faraday Copper. I stepped off the board on the same month that we went public with Lithium Bank, even though we were working quietly with the management team on Lithium Bank for 4 years. And we released the PEA, the first preliminary economic assessment of our #1 Boardwalk project, about a month ago. And people can look at the numbers there. It's a very large project. The assumptions there would make it the largest theoretical production project in North America, just over 31,000 tons a year. So it's a project of merit. It's a project that's meaningful, and there's also the ability to expand it. And everyone says that there's optimization. Well, why didn't you put it in the PA? Well, the optimization there is something that, as the industry advances, and as we look at the other ways to truly enhance and optimize the project, which is low-hanging fruit. First of all, we have the 30% tax credit from the government of Canada. That's not included in our PA. And then, of course, all the other DLE technologies, which you eventually have to choose one, which we went down the path within the PEA. And I think the numbers speak for themselves. Because why would someone buy a Lithium Bank share, Jesse? They're not buying it because they're married to it. They're buying it hopefully to speculate and have appreciation. Key points on Lithium Bank: we have like 40 million shares outstanding. We control all of our projects on a 100% basis. We just raised $6.5 million on a flow-through basis at $1.90 a share, right? So with a lot of catalysts are still going to come down the road for Lithium Bank shareholders for the rest of this year. And I think it's a way that people can speculate in lithium that's different than hard rock mining. It's different than the salars of South America, albeit they're all a solution. We need sort of all hands on deck, but it's the future speculation. I think you can liken it to horizontal fracking in oil. People that were skeptical, and as that industry expanded and they cracked that horizontal fracking code and started to produce oil and gas at a very large quantities 15 years ago, what happened to the land packages that had that type of formation? They went parabolic. We are a land bank. We're progressive, and I think that's why Lithium Bank, it speaks for itself. It's something that people can follow within the context of lithium, and it's my sole focus. It's the only company I'm involved with. It's the only board I'm on, and I won't be joining any other boards. And it's nice to continue to follow this energy transition. And I think lithium is one of these key pillars and we'll see. But anytime there's any kind of a progressive advancements within direct lithium extraction, DLE, companies like Lithium Bank get a lot of collateral benefit, because a lot of those attributes are potentially going to feed into a company like Lithium Bank. So we applaud any time that we hear of this type of progress. And a lot of big companies are taking a keen interest in DLE, because we're at the last few meters for that industry to really take off. And then it's going to be game on in my view.
Well, I will put a link in the description to Lithium Bank if people want to check that out. Thank you so much for joining us once again, Gianni. I will be in Zagreb in October. We did do a live studio interview last time I was there for my channel, Commodity Culture. Would love to do another one again this year. And yeah, definitely hope to do it again.
Look forward to it, Jesse. Have a great summer. And we'll, in any case, maybe in January in Vancouver, I'd like to do a talk. I know Jay Martin and the Martin family since about 20 years now. So it's nice, and a lot of friends that come up to the show. So hopefully make it up there.